Hello everyone, welcome to another session on dollar INR. A lot happening in the currency markets after the Federal Bank Reserve meeting, FOMC meeting that happened on 28th and 29th. Now, clear cut, guidance, not really guidance, but conclusion that the rate hikes in US is not going to be so aggressive, but there will be rate hikes. On top of that, yesterday night, US Q2 GDP also came in and that was lower than expected. So, see the impact on the dollar index. Okay, this earlier resistance was broken and it was finding support here, gone higher. This support region broke yesterday. Okay, now surprisingly it has come back to that support region. So the market, a lot of flip flop, lot of uncertainty. Very difficult to say whether this will hold or is it a really valid breakout. The bottom line is it did significantly go below the support region. Now, that was one of the reasons why we saw a stronger rupee opening. Let me come to dollar as well. Okay, so this is the dollar INR. A weak dollar index, helped rupee, and it opened at 95.38 compared to yesterday's closing of 95.69. So a big down gap opening, but today it rupee gained as strong as to 95.25, but end of the day it closed at 95. So the close is the same price, even though we saw the amount of downside in the dollar today. But if you follow this chart that we have been following for quite some time, okay, so this line is our 50 average which we have been following. If you look at the current prices are very close to the moving average. The current price is exactly at 95.38. Okay, and we have seen in the past that a 50-day average is a very good indicator of turning points. Very rarely it has gone below. It has gone below here but could not hold substantially. And all these months, if you see here, all these places 50-day moving average has support indicators. And if you look at, let me clean this up, if you also look at this upward sloping linear regression channel, okay, line, this comes here, okay, this is the gray line, this gray line comes here. Okay. So you have the lower trend line of the linear regression channel as well as the price going below the 50 average. So two very strong support indicators. Okay, now come back to show another chart of dollar INR is the same, but this is a 25-day average. Okay. This is a 25-day moving average. That is this blue line. So prices are actually close to the 25-day moving average. It is close to its half percentage filter below the 25-day moving average. Okay, so strong support signals in the dollar INR, the region around 95, 25, 30 or 25, 35. We have seen multiple technical signals converging, or we can say confluence of indicators at that level. So the bottom line is that is the level for dollar importers to hedge. Okay, when it had gone higher like this, we had dollar importers to hold, and we had suggested dollar exporters to sell at 96.50. There we suggested dollar importers to take call options rather than forwards, and dollar exporters forwards and the puts. Now the prices have come down, so dollar exporters can relax a while. It's the time for dollar importers to hedge. Okay, so you need to look at some hedges at 95.25, 95.35. The support indicators given by the 50-day and the 25-day moving average. Okay, so you should look to do some decent amount of forwards, and you can also look to do vanilla options to diversify risk. Dollar exporters, you can hold on for a while like we did last time. The prices had gone higher and we had participated using forwards and puts. You can hold on for a while, let the prices go higher. Situation is still not very conducive for the rupee to gain significantly. Dollar index has come down, so it has come down a bit here. I am not very sure whether dollar index will remain lower. The greater probability, as far as my recommendation, is that dollar index will recover. Okay, so rupee will come under pressure. Crude is another factor. Crude is not cooling off. Middle East still continuing to boil. So it doesn't look like that we have too many favorable reasons for rupee to gain. Okay, rupee would likely come back under pressure. So capitalize on this movement and dollar importers should hedge. Okay, so that is it from my side. Have a great weekend ahead.